Welcome to the Explainer. Today, we're going to break down a really powerful process for traders called the single ticker deep dive. It's all about turning that gut feel guesswork into a real professional operation.
Okay, so let's dive right in. In the world of trading, there are really two kinds of people, right? On one side, you've got the gambler. They're impulsive, they chase the hype, and they don't really have a plan. And then you have the professional. They're systematic, they manage their risk, and most importantly, they follow a process.
So the big question is, how do you make that jump? How do you go from being the gambler to the pro? Well, we're going to walk you through a professional-grade analysis system that's designed to do just that, to build discipline and help you make smarter, more calculated decisions.
All right, step one. And honestly, this might be the most important part of the whole thing. You've got to check the market weather first. I mean, think about it. You could have the best boat in the world, right? But you're not going to sail it straight into a hurricane. That's just common sense. In trading, it's exactly the same logic.
Okay, so let's look at a real example here. On this specific day, January 9th, 2026, the market's main weather vane, the VIX, is sitting right at this number.
I know, at first glance it just looks like a random number on a screen. But trust me, that one number tells us a ton about how the market is feeling right now. Is everyone feeling calm and confident, or are they starting to get scared? This is our first, absolutely critical piece of context.
You see, the VIX is basically the market's fear gauge. If it's way up, over 20, people are panicking. If it's super low, like under 15, everyone's getting a little too comfortable, maybe even complacent. So where are we? At 16.15, we're kind of in this middle ground, this transition zone. So things aren't crazy, but they're not sleepy either. And that tells us something really important. We need to be selective. We need to be picky with our trades.
And check this out. A professional process doesn't just look at today. It looks ahead. It scans the horizon for potential storms. See that? The CPI report, the big inflation number, is coming out in just a few days. Now, a pro sees that and thinks, whoa, that could totally rock the boat. So they're not going to go all in right before a potential storm hits. It's just smart.
Okay, so we've checked the weather, and it's okay to sail. What's next? Now we need a big, fat, green light from the specific stock we're looking at. And listen, this isn't about just one little signal saying go. We need a few of them, all screaming yes at the exact same time. This is what we call confluence. It's a fancy word, but all it really means is we need a yes from three different places. First, the trend. Is the stock generally heading in the right direction? Second, the level. Is the price at a spot where buyers have shown up before? And third, momentum. Has all the selling pressure finally run out of steam? We are waiting for all three of those to line up perfectly.
You know, the logic is just like buying a house. You're not going to make an offer just because the price is good, are you? No way! You need the neighborhood to be improving, the price to be right, and you need it to pass inspection. It's only when all three of those things line up that you commit. Trading should be the exact same. Trend, level, momentum, you wait for all three to give you that green light.
All right, so you've got your green light. Now what? Well, now we have to pick the right tool for the job. See, a lot of amateurs, they only have one tool in their toolbox, buy stock. That's it. But a professional has a whole toolkit, and they know exactly which tool to pull out based on what the market is doing right now. And this is a huge insight that the big institutions live by. It's simple, really. You change how you play the game depending on volatility. When things are crazy and volatility is high, options get really expensive. So what do? You become the casino. You sell that expensive risk to other people. But when things are quiet, when volatility is low and options are cheap, that's when you become the player. You buy those cheap options and bet on a big move.
And here's the beautiful part. A systematic process automatically matches the situation to the perfect strategy. For example, if the market's trending up, but it's kind of calm, low volatility, the system says, okay, use a debit spread. It's a way to bet on that move up without risking the farm. Or what if the market's just going nowhere, chopping sideways, but volatility is high? Well, there's a tool for that too, the iron condor. You can actually make money if the stock just stays put. The point is, the system removes the guesswork. It just gives you the right tool for the job.
Okay, last step. And you could absolutely argue this is the most important one of them all. You must have your exit plan figured out before you ever get into a trade. It's like a pilot. They would never ever take off without knowing exactly where they're going to land if an engine fails. Your trading deserves that exact same discipline.
So the system helps you figure out your probability of profit, or your POP.
And notice the goal here. It's not about trying to hit some massive once-in-a-lifetime jackpot. Nope, it's about consistency. It's about stacking up smaller, high-probability wins over and over again. That's what professional risk management is all about.
It also defines your stop loss. This is your eject button. It is your non-negotiable line in the sand. It's a specific price you decide on beforehand that says, you know what, my analysis was wrong. And getting out there is what stops a small loss from turning into a total disaster. It's your financial circuit breaker.
And this is so crucial. Having a specific, predetermined number like this, closing below 148.50, it takes all the emotion out of the decision. There's no, oh, maybe it'll come back. There's no hope. There's no guesswork. The rule is broken, you exit.
That's it.
Period. It is pure mechanical discipline.
So to bring it all together, this whole systematic process really just boils down to a simple 4-step checklist. Number 1, check the macro weather. Number 2, wait for your 3 signals to all align. Number 3, match your strategy to the environment. And number 4, execute your exit plan without emotion. You do that, and you're not gambling anymore. You're building real discipline.
And that brings us to the final, crucial question you've got to ask yourself. By following a process like this, you ensure that you're conducting a well-planned operation, not just rolling the dice and hoping for the best. So, which is it going to be? Is your next trade a gamble, or is it an operation?